Hello and welcome to the Motilal Oswal studio. You're watching Your Trades with me, Shreyansi Singh and Snehisha. And over the next half an hour, we'll get you an update going on what really happened today in terms of the day gone by in trade. And let's kickstart the show by looking at just that. When you take a look at the Nifty, now of course you did have the Nifty struggling near those 23,000 levels, and you did have some resilient moves coming in, especially towards the end of the session. So that's largely the kind of handover that you had coming in. As far as the Nifty is concerned, managed to hold up above those 23,000 levels. So that was the kind of roundup that you also had coming in as far as the Nifty is concerned. In terms of the top losers, then you did have the realty pack topping that list in terms of top laggards, followed by auto and IT. Those were the laggards coming in on a sectoral basis. On the flip side, you did have some of those select few sectors, the likes of PSU Bank, metal as well as finance, that held up quite well. And in terms of stocks, then let's also take a quick look at the counters that were buzzing away in trade. When you take a look at the counters that were taking it a little bit on the chin, you did have select few auto names, the likes of Eicher Motors, M&M, that were on the back foot. Some banking names as well, and of course there was heavyweight Reliance that was down 1.5%. Went home with those kind of cuts as well. And on the flip side, you did have a select few counters, the likes of SBI Life, HDFC Life, holding on to a tinge of green. And that's near where they closed also. Kotak Mahindra Bank also 1.5% uptick coming in on that stock as well. Largely, that was the kind of picture that we saw emerge. Now, in terms of the broader markets, you did have a little bit of underperformance coming in as compared to the benchmarks, and there was some recovery that we saw coming in towards the end of the session. About 1 p.m. onwards, that's when you saw the recovery coming in as far as the indices as well as broader markets are concerned. When you take a look at what else really happened in trade today, Snehi, it was the SIP figure that really stole the spotlight.
Absolutely. And in fact, the kind of exuberance that we saw, whatever little exuberance that we've seen in the market today, was entirely fueled by that SIP data coming in. Because like you mentioned, we've seen a flip coming in 1 p.m. onwards, and around then, slightly around before that, around 12:30 or so, we had the SIP figures coming out along with the AMFI data, and SIP good moves coming in. SIP inflows above 26,000 crore for a second straight month, even amid a market that has been so volatile and so negative in the month of January. Really indicates the strength of the retail investor in the markets, looking good when it comes to the SIP front as well. But while we have ended in the red, it is very important to note what we have done when it comes to Nifty. It's been a 1% recovery from the day's lowest point on the Nifty, 100 points, or rather 250 points higher from the day's lowest point. Nifty mid-cap and small cap have both inched 3% higher from its day's lowest point. Although no doubt they have ended in the red, but look at the kind of recovery almost at the day's highest point is where both your Nifty small cap and mid cap have ended. Now, Shreyansi did highlight a couple of stocks, a couple of more that I wish to highlight. SAIL was up 5.5% on the back of its earnings. Vodafone on the flip side down 4.5%. Aircon International down 5.5%. Jubilant Food numbers came in recently, and you have 3.5% cut coming in on Jubilant Food as well. Revenue, PAT, everything is lower, and on a year-on-year basis as well, your EBITDA margins and EBITDA have shrunk quite significantly. So those are a couple of counters that we wish to highlight in today's trading session. And of course, Ashok Leyland, what a beat that's coming on across all fronts, and that stock was up and away in today's trading session, almost 7.5% higher is where that stock is closed for the day. Very positive management commentary coming in as well. But on that note, then let's shift focus to an expert voice. Let's bring on board Amar Singh, Senior Vice President Research at Angel One, to understand the kind of moves that we can expect to see tomorrow. Amar, on a prima facie basis, on the surface level, if you see we've ended in the red, but underlying, if you see the kind of recovery that we've seen today across indices, does it look promising enough for us to be able to cross that 23,200 resistance that we have been seeing on the Nifty for the last couple of trading sessions?
Yeah, I would say that if you look at the way the markets have recovered today, clearly shows that there's definitely buying interest coming in at lower levels, because Nifty did breach the 22,800 level, and earlier also, if we go back, so Nifty had earlier breached that level on 27th of January. But again, it has bounced back, and some of the, I would say, indicators are definitely pointing towards some sort of positive divergence on the charts. So now it has very strong and very crucial support zone, and until and unless there's some news flow which comes in which the markets have not factored in, and of significant proportion of value, then only we would see that breach. Otherwise, we could witness some sort of consolidation. But yes, again on the highest, higher side or the upside, initial resistance I would say somewhere around 23,200 to 300. That's a zone of resistance where Nifty could move up to. And what we are seeing is that now across the board and across sectors, we've seen some positive momentum building up. But we'll have to see whether there's holds or not. That's going to be something which is very important and crucial. But yes, as I've been speaking for many weeks now, that still the intermediate term trend continues to remain bearish. That's the reason higher levels are being sold into, and that's what we are likely to witness going forward as well, because some of the technical indicators clearly flashing that the market is in for consolidation. But yes, the recent lows seems to be that the market is respecting that, and we could witness some pullback.
All right, then, against the current backdrop in mind, are there any picks that you have for our viewers? I believe that you're quite bullish when it comes to Ashok Leyland. That was a stock that was buzzing away in trade, went home with gains of just about 7.8% thereabout.
Yeah, I would say that if you look at Ashok Leyland, we've seen the stock correct, because see, what has happened is that all these stocks have rallied significantly and they've been multi-baggers. So for Ashok Leyland, if you look at from almost 40, 50 levels to 260 and then corrected all the way towards 200 levels. So currently it's up by roughly around 10%. Today's move has been very strong and on significant volume. So that means that this could be a short-term or a very important bottom for Ashok Leyland, no doubt about it. So this is one stock one can definitely keep a close watch on. Sustaining of the 220 levels, we could witness stock rally towards the 247, 250 mark, whereas stop loss needs to be below the 200 mark, because this is going to act as a very strong support. And the second stock to look at is Engineers India Limited. So this is again one stock which, if you see, we witnessed a significant, I would say a 50% erosion in value, because the stock from almost 60 levels had rallied towards 300 and then again corrected all the way towards 148 as today's low, I would say. And what we're seeing in Engineers India Limited also is that over the last few trading sessions, particularly two trading sessions, that is Monday and today, the volumes have been significantly higher. So that tells me that this could be a very important support for the stock. And the stock sustaining over the 165, 170 level, it has the potential to rally towards the 190, 193 levels, whereas the stop loss needs to be below the 150 mark.
Thanks, Amar, for highlighting your stock picks and the stocks that are looking attractive for tomorrow. On that note, we'll let you go. Thanks once again for speaking to us at ET Now. Let's shift focus from one expert voice to another now, and which are the sectors that you should be cautious about amid a market like this. Listen into the word coming in from Jonathan Garner, Chief Asia and Emerging Markets Equity Strategist at Morgan Stanley on the same.
We're overweight working with the local team financials, industrials, and to a lesser extent consumer. And we are more cautious on the defensive parts of the market, with I suppose a broadly neutral stance on the IT services names. That's how we put it together. And India financials are a core holding in the underlying growth environment that we have in India. And again, their valuations have adjusted somewhat lower in the last few quarters. So that's interesting to us.
All right, then with that, it's time for a very quick breather on the show. When we come back, we'll take stock of the derivatives roundup then, so don't go anywhere.
Hi there, welcome back. You're watching Your Trades on ET Now. Let's take a look at how the F&O space, the entire derivative market, has shaped up in today's trading session. If you take a look at the index futures for the Feb expiry, let's take a look at what's happening on the Nifty front. Short build-up continues to be seen over there. That was the same trend yesterday. Not surprised, because the Nifty is subdued in today's trading session and has ended barely above the 23,000 mark. So that looks a little bit bearish right now. The sentiment across the street is bearish. Short build-up being seen on Nifty. Nifty Bank, however, long unwinding is what is being seen, so that is also slightly negative coming in for Nifty Bank in today's trading session. India VIX, we highlighted at the beginning of the show, it's managed to close below the 50 15 mark, but only very nominally because we are at 14.9 when it comes to India VIX, but only a 0.2% uptick coming in today, so that's looking very good on the India VIX front. Now, if you take a look at the active calls and active puts for the 13th Feb expiry, call writing being seen at 23,100 and 23,200, making 23,200 the unchanged resistance level from yesterday. This is what we were chatting with Amar about, the same, that 23,200 seems to be a slight bit of a resistance mark that the Nifty is having a little bit of a trouble crossing, but let's hope tomorrow that can change for the markets. In terms of active puts then, if you take a look at the 13th Feb expiry, once again, mild put buying has been seen at 23,000, mild put writing being seen at 22,900. So not much to worry about. It's a tight range for the Nifty. This is what the FNO space is indicating. But well, yes, 23,200 on the upside is going to be the next key level to watch out for.
Alright, then those are the levels that you should be watching out for. But speaking of levels and speaking of important levels at that, AMFI's January data is the one that really stood out about today, because you do have the SIP inflows then topping 26,000 crore mark for the second consecutive month as well. Flows in small and mid cap schemes also remained robust even amid the kind of volatility that we've seen of late. What are the other key highlights then? We do have Varun standing by with just that update.
Well, so the strong DI participation continues in the Indian equity markets in the month of January also, because the monthly SIP numbers are once again at record highs. If you look at the monthly SIP numbers for the month of January, it has come at around 26,000 crores, and this is the second straight month wherein the number has crossed the 26,000 crores mark. Also, if you look at the total AUM, it is around 67.3 lakh crores, which is all-time high level. Only the equity AUM, it is at 29.5 lakh crore, that is a 6-month low. And the main reason of this is the mark-to-market impact, which has led to the equity AUM coming to 6 months low. But if you look at the equity inflows, it has come around 39,688 crores. This is a tad lower than previous month, but yes, it is almost at record high levels, and this is the 47th straight month wherein we have seen equity inflows. Most of the inflows have gone towards the mid and small cap funds, because in the mid cap funds we have seen of the overall inflows, 13% has gone to mid cap fund, small cap fund around 14.4%, and this is the 6th month wherein we have seen strong inflows in the mid and small cap segment. If you look at other funds, the sectoral funds have seen inflows of around 9,000 crores, which is around 22.7% of the total inflows that have come in equities. Also, there were strong flows in the flexi cap funds, and this is the 10th straight month wherein we have seen such a good flow. Into the hybrid mutual fund, we have seen the floats doubling on a month-on-month basis to 8,767 crores. Only the NFOs, there were some weak inflows. The overall inflows were actually down by around 67%. If you look at the number of schemes in the month of January, there were around 12 new schemes that were launched, which is a bit lower than what we used to see previously. But yes, even if the markets are volatile, we have seen the mid caps on small caps in pain. We have seen sharp sell-off in them, but yes, the DI participation in the Indian equity markets, it is still strong, with the SIP numbers again coming at a record 26,000 crores.
Okay, Varun, thank you so much for highlighting January's AMFI numbers. And like Varun correctly mentioned, you know, robust moves coming in across the SMID schemes, even when the market is being rather volatile, and a bunch of this volatility is being seen in the small cap and the mid cap space. What is the outlook going ahead, and what should you be doing as a retail investor? Let's go across and revisit the word coming in from Suranjana Borthakur as well as Sunil Subramaniam on the same.
In spite of sharp corrections in the market last month, I think the inflows continue to remain strong in the equity side, and which is actually indicating that the confidence of the investor remains where it was, so which is a positive thing. I think when you look at the overall numbers, I mean, the overall AUM has gone up a little, but I think that is due to liquid funds and the debt side actually beefing up in terms of new inflows coming in. I think there's an increase in small cap. Mid cap is more or less flattish. I think that's also a good trend that probably with all the noise in the market, the encouragement remains with the investors and they are looking at the long term.
251 to 500 is the universe as presented. But beyond 500 to 2,500 also there are stocks. right? So there are fund managers, the benchmark is either a small cap 100 or a small cap 250. So there are fund manager styles who stick within the index to choose their 50, 60, 100 stocks, and those who go beyond, right? So those who go beyond are going down the cap curve and taking greater risk. So choose one fund manager like that who goes beyond and takes risk. Second aspect is SEBI rule says only 65% needs to be in small cap. So there are some people who manage risk by putting the other 35% in larger mid or large cap. They are playing safe and trying to reduce the volatility. Choose one fund in that way. Third is sectoral diversification. Lots of people dabble in a lot of sectors, some run relatively concentrated. So I think if you choose 3 funds which are different in these styles, that's the way to go about it.
All right, then that's the word coming in from Sunil Subramaniam as well. But time now to take a look at the stocks that were buzzing away in trade. And speaking of those, there was, of course, Ashok Leyland that was up just about 8%, and even SAIL that was up over 5.5%. In fact, we do have Rabinder who's standing by with just that update. Rabinder, which are the stocks that then made it to your list?
Well, Ashok Leyland is in focus where company has announced its Q3 number and the revenue saw an uptick of 2% year-on-year basis and PAT saw a uptick of 31% year-on-year basis at 761 crore and margin also saw a uptick of 78 basis point year-on-year basis and revenue was above the estimate. And there are also management commentary coming in where management says that the sales in the international market are showing strong growth and they expect this momentum to continue. They also say that the Switch has a healthy order book and has planned to come out with a series of product in next 12 months. Moving to sales were also in focus where company's Q3 revenue saw a uptick of 5% year-on-year basis and net profit declined by 67% year-on-year basis at rupees 142 crore and margin saw a decline of almost 90 basis point year-on-year basis. So sales number was not good, but the reason for the share uptick was that the increase in sales volume over low base of Q2 and that companies that slightly reduced and the valuation look attractive from the recent fall. Stock was down almost 21% in 6 months. Moving to next, International is also in focus where company Q3 revenue saw a decline of almost 11% year-on-year basis at rupees 2613 crore and the net profit also saw a decline of 65% year-on-year basis at 86 crore. Margin saw a decline of almost 400 basis point year-on-year basis. Moving to next, Coromandel International were also in focus where company has received an order from Andhra Pradesh government for rupees 1539 crore towards expansion of a fertilizer manufacturing facility at Kakinada. And lastly, Cyient DLM were also in focus where company has signed a production contract with Boeing Global Services for precious machine parts and assemblies.
Taking us through all of those stocks, let's also shift attention and talk about Berger Paints today because that stock has done pretty well in today's trading session. About 1.8% higher is where it is closed for the day. And Abhijit Roy, MD and CEO of Berger Paints, says that the management is confident of robust margin growth in the coming quarters and shares his insight on the growth going forward. Let's go across and listen in.
The margin loss that you see is very small, negligible almost, and in terms of going forward, how does it look like? I think, it looks quite good. I think we should improve sequentially as we go across. So fourth quarter will be, second quarter was the worst, I would say. Third quarter was better. Fourth will be even better, and first quarter of next year will be better than the fourth quarter as well. We always have said that margins, the EBITDA margin will be in the range of 15 to 17%. This time also we have been at 16.2%, which is at the higher end of that 15 to 17% band, and we would remain in that particular band, maybe at the similar levels even in the quarter 4 as well.
Alright, and with that, we're completely out of time on this edition of Your Trades on ET Now. From me, Shreyansi Singh, Snehisha, as well as the entire team that put this show together. Thank you so much for tuning in.